Good afternoon and welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Vivek Iyer and with me is Reema Tendulkar. Good afternoon, Reema. Cooled off a little bit from the raise high, especially the Nifty bank, expected to be a strong outperformer, but now, back to the flat line.
Back to the flat line for the Nifty bank. For the Nifty, we were comfortably above 23,200. Compared to that, now we're down to 23,150. The mid-cap index was up 1.5%, now up only about 0.8%. So gains have moderated a bit. But these are the top stories at 1:30. Stocks perk up, shrugging off tariff fears, with mid-caps leading the charge after the recent slide. Metals, healthcare are the big gainers. Pharma, realty rebound too, even as IT drags.
SBI card shares surge over 5% after brokerage firm Macquarie upgrades the stock to outperform and raises the target price to 1,000 from 735 earlier, citing robust prospects.
A strong set of Q3 numbers drives Muthoot Finance higher. The stock rallies 6% as gold loan growth remains strong. The management tells CNBC-TV18 the net interest margin will remain between 11 to 11.5% going ahead.
Natco Pharma's shares nosedive 18% today after Q3 disappoints as margin contracts due to lower contributions from Revlimid, which is a high-margin product. Suven Pharma, on the other hand, rallies 8% on the back of its Q3 results.
Vodafone Idea jumped 6% after the management in the conference call yesterday says they expect another round of tariff hikes within the next 9 months, given the state of the industry. Gains have moderated a bit, but still holding up in the green for the key indices. The Nifty bank is, the spot of bother where the Nifty bank has completely flattened out right now. So erased all its gains. And on the way down, you've got stocks which have slipped a tad bit. You've got an ICICI Bank. HDFC Bank is down nearly 2/3 of a percentage point. That's the picture on the Nifty bank. Nagaraj Shetty from HDFC Securities is now with us on the show. Nagaraj, would you be disappointed that the markets haven't had a one-way trending, uptrending kind of a trading session? We faltered a bit in the last 30 minutes. And what would the trading calls be?
Hi, good afternoon, Reema. I won't be disappointed with the movement of the Nifty. Nifty has placed at the immediate resistance of around 23,200 levels, and volatility is there. And the last two sessions of upside momentum has certainly changed the short-term picture of the market. Market is finding a base around 22,800 odd levels, has formed a double bottom type of formations, and doji pattern of last session is indicating that the indecision among the bears is likely to end, likely to reverse soon, and I'm expecting more upside. Though market is volatile since morning, I'm expecting upside bounce towards the end and more upside in the near 1 to 2 sessions, another 1 to 3 sessions. And overall chart pattern is looking positive for me for the Bank Nifty as well. Bank Nifty currently plays around a support of around 49,000 levels, and I'm expecting upside bounce from the lower levels from here onwards.
Nagaraj, what are your individual picks for the day?
Yeah, I have two picks from the mid and small cap segments. If you look at the broader market indices over the last couple of weeks, it has been a continuous downtrend. Recently made an promising bottom reversal at the lower levels in last sessions and bounce back from the lows. I'm expecting further outperformance in the mid cap and small cap segments from here onwards. On that basis, I have two picks. One is from GMDC. GMDC has been in a sharp downtrend last couple of weeks. It made a important swing lows in last session, formed a divergence pattern is also there on the RSI, and currently trading around 281. I'm expecting this to bounce back from at least for the short-term basis. One can look to buy at this point of time, currently trading around 281, and the upside target would be around 298, 300. One can place a stop loss at 270. Second one is IRB Infra. Chartically, IRB Infra was in a downtrend, and the recent price action is indicating a possible reversal of a downtrend from the lower levels. And though currently showing minor softness from the higher levels, the overall chart pattern is looking positive. Currently placed around 50, one can look to buy at this point of time, and target would be around 53, and one can place a stop loss at 48.5.
Thank you very much for that. Slipped a little bit more in the last few minutes on the Nifty. 115 on the Nifty. The Nifty Bank too is down close to about 60 odd points. But we'll get into a break. Before that, we'll get to the Growth Code, an initiative by Grow on CNBC TV18, where Prashant sat down with SEBI's whole-time member, Mr. Anand Narayan, to discuss why traders and investors must strike the right balance between risk and returns.
In a phase like this, everyone chases returns, right? I mean, that's the number one agenda, absolute returns, how much can you make, etc. But there is also risk involved in the journey of making those returns, which we don't really talk about at all. I mean, very, very little. Your perspective on it, and how important is it to look at risk-adjusted returns in that sense?
You're right. We tend to focus on returns, which is a measurement of where you started from and where you ended at. So the A to B of just defining those 2 points. The risk element is really how was your journey as you move from A to B? How bumpy was it? How smooth was it? And the reality is it's an independent variable that impacts us. Return is one element, but how your journey was is also crucially important for all of us. Now, you often hear people giving advice that don't worry about the ups and downs. Look at the end points and see you get this annualized, 10%, 15% returns from different asset classes. But the practical reality is all of us have a certain risk tolerance. And when you see volatility, when you see big jumps up and down, you do go through an emotional roller coaster.
Absolutely.
And you should have the ability to absorb that. So I think it's crucially important that we start to, as investors, as long-term investors, we start to internalize the concept of risk. We start to measure what is our risk appetite, and it's a very individual number. I cannot answer for you, and you cannot answer for me as to what our respective risk appetite ought to be or should be. It is a unique experience based on where we come from. And once you know what your risk appetite is, you've got to create an investment portfolio that mirrors that risk.
Welcome back. Rashi Peripherals is down close to about 6%, and at one point of time it was down nearly 8.5–9%. Now the Q3 numbers were a bit disappointing. The company's top line has seen a growth of 7%, while historically for the last many quarters the company has seen double-digit revenue growth. And therefore margins too are lower on a quarter-on-quarter and on a year-on-year basis. Kapal's Pansari, Managing Director, Rashi Peripherals, is now with us on the show. Thank you very much for joining in. This is Rima here. So first, was Q3 slightly lower than your own expectations? Because revenues are down 23% quarter on quarter. On a year-on-year basis, you're no longer at that double-digit run rate.
So Q3 usually is post-Diwali, is the lowest quarter of the year for any given financial year historically. And therefore, that's a reflection of lower growth from year-on-year, from a quarter-on-quarter basis. If you look at from a year-on-year basis, we've continued to grow at 7.7%, which is also a little lower than our expected, primarily because of our working capital cycles got increased, and we want to make sure that we are on strong footing on these two fronts before we take that leap of growth.
So by how much did your working capital get extended in Q3, and what was the reason for that? And what would Q1 look like? Can you get back to double digit?
Yes, so Q1 will definitely look at lower double-digit growth. But in this quarter, the receivables got increased by about 7 days in our company. And therefore, that is the reflection of our higher working capital. This quarter, definitely it has already started improving. And Q4 is also usually the second or the best quarter due to the year-end financial closing. A lot of budgets on IT spends gets consumed. And therefore, we look at good growth for this quarter as well.
Low double digit for Q4, right? The Jan to March quarter. Yeah. And receivable days will come back, or it's still going to be a little elongated? And what is the number at and your comfort level?
So usually our receivable ranges around between 40 to 45 days. Right now it is at 49 days and it will come back to the similar levels.
Okay. Mr. Bhansali, give us the outlook on margins. Both on a year-on-year basis, sequentially, there appears to be some moderation over there. So margins, Q4, how do you see that panning out? And FY26, where will be the guided margin range?
So while for Q3, I will just iterate that we have grown by about 7.7%. Our PAT margins have expanded by about 29.4%. Our endeavor is to continue to grow our bottom lines, and Q4 will also have similar expectations. Since we have a good tailwind on the 9 months to 9 months, our PAT has grown by about 62%, and that's a sign of our strong financial results.
Got that. The India AI mission has selected 10 firms for the Mega 10,000 GPU tender. Now, I understand you are a B2B company and therefore you will not directly participate, but you can indirectly benefit. So what is the role Rashi Peripherals is going to play in this?
Yeah. So in this AI mission, a lot of companies are setting up their AI-based GPU server and data center infrastructure. Rashi Peripherals has already implemented one of the large projects from NMDC Yota data center, and there are many more that will come in this AI mission to participate. However, such large projects, what data centers have realized is that such large, in one phase, they are not going to go. There will be smaller projects, which based on usage, they will keep on implementing, and multiple smaller projects will continue to come to us as an opportunity.
Understood that. The other question what we want to ask you is, especially when it comes, with your tie-up with quick commerce companies for instant delivery of Wi-Fi routers, keyboards, laptops, etc. What percentage of revenue is actually coming in from there, and how do you expect that particular segment to grow?
So quick commerce definitely is taking a lot of wave. We have the first movers advantage in quick commerce. Right now, the revenues are small, less than 1%, but soon this will probably grow exponentially. This is currently the fastest GTM market strategy for us right now, and it will continue to span out. To what extent it will come, I really don't know, and only time can tell about this space.
What are the current volumes? I understand it's very, very small, but what are the current volumes? And in the last 3 months, say in Q3, what was the growth rate from quick commerce?
Quick commerce, I think it is in triple-digit percentage growth numbers because earlier the base was non-existent. So the percentage growth doesn't really matter. Right now, the volumes from a contribution perspective I can give you is in lower single digits, which is currently growing at about 2x or 3x.
Okay, and what are the margins that you would make via quick commerce versus the traditional channels?
Yeah, similar to the traditional channels, I think they are not keeping a lot of inventories. They are turning around quickly, and our replenishment cycle also gives them ability to rotate faster. So the margins are similar to our general trade margins.
Understood that. Mr. Pansari, any plans for inorganic growth?
So in organic growth, we've recently announced an acquisition of a cybersecurity distribution firm. I think that is one of the first of our announcements from an inorganic growth perspective. This is our first initiative towards getting into the cybersecurity space. We are hoping that we've made an announcement. I think they're working still on this category. You will see our participations in such inorganic growth in segments where we're not existent as of now.
Indeed, Satcom Infotech is the company that you recently announced an acquisition, which opens up avenues in cybersecurity. The acquired company had revenues of about 170 crore rupees as of FY24 with a profit number of 2.5 crore. Kapil, thank you very much for joining in. That's Rashi Peripherals saying that the working cycle got elongated in Q3 and therefore growth slowed down to some extent. But going forward in the subsequent quarter, Q4, which is traditionally a strong quarter, growth will get back to low double digit. And even the receivable days will come back to normal levels of 40 to 45. We will slip into a short break. On the other side, we'll get you more in the markets.
Welcome back to Midcap Radar. Well, the stock in focus, the company in focus is NBCC. The company came out with its results a couple of days ago, and the company just concluded its conference call. In the conference call, the company has tweaked the guidance as far as both the FY25 and FY26 is concerned. Now, coming to FY25, company earlier was looking at a top line in the range of 12.5 to 13,000 crore, which has now been slightly trimmed or moderated to 12 to 13,000 crore. EBITDA margins, the company was earlier anticipating in the range of 5.5 to 6%. Broadly, they have maintained the guidance. However, they do see a slight downside risk of close to 50 basis points. The consolidated order book of the company is very strong at 1 lakh crore, and the order inflow so far as FY25 is concerned is 16,000 crore, and the company has informed in the conference call that there is an additional 33,000 crores that they expect as far as order inflows for the rest of the year. Now, as far as FY26 is concerned, Rima, the top line guidance that they've given is actually very strong. Top line growth, they're expecting to grow above the historical average, almost 25 to 35%. EBITDA margins, they're seeing improving by 0.5 to 1%. And annual order inflows are seen almost by 25,000 crores the coming few years. So strong guidance as far as FY26 is concerned.
And what's the current order inflows? I mean, just to put the 25,000 number in context.
Current order inflow, FY25 expecting to end close to 20,000 crores. 60,000 currently and another 3,000 is expected. So strong order inflow, and they're expecting it to sustain for the next 3 to 4 years. So it's strong guidance coming from NBC.
And margin expansion too on a gradual, steady basis. But let's talk about IGL. So IGL told CNBC-TV18 that they're confident about achieving a 10 to 15% core business growth for the next 5 years. In conversation with Abhimanyu from the sidelines of the India Energy Week, the company's managing director, Mr. Kamal Kishore Chettiwal, talks about the growth projections of the industry and the company.
IGL, as you know, we are looking at a few diversification opportunities, and if I talk about the core, that we see that in next 5 years it continues to grow at 10 to 15% in our GS, because that we are factoring in that we will be some expansion both organically, inorganically, exclusivity, post-exclusivity period also we are looking at that, because endlessly this cannot remain exclusive period. So post-exclusivity, what will be the expansion that we are factoring in. So we are confident that 10 to 15% growth in our core business is achievable. Right now what we are doing is the newer GAs are growing at around 28 to 30%. NCR, other than Delhi, is growing at 10 to 15%. LNG space, that is, the story is yet to start, I feel, in India, especially the retail LNG space. And also the virtual pipeline mode, that is another mode that you can use this to go to spaces where the laying of pipeline is very, very costly thing, and as well as very difficult, especially the hilly areas and non-accessible areas, you can say, or sparsely populated areas. There, if you lay the pipeline, then the gas flow is not such that it makes a more economic sense. So there I feel that this retail LNG plus space will be utilized. So these are the three major areas. I feel that retail LNG, bio LNG, as well as CBG space will provide momentum to this sector.
Okay, that's, IGL for you. But, despite the company sounding, optimistic, whether it's NBCC, IGL, or even Rashi Peripherals, the markets are not listening. The markets are giving up gains now. So 23,100 also has now been given up. From the day's high, the Nifty slipped more than 150 points. The mid-cap index, which was up over 1.5%, is only up close to about 1/3 of a percentage point. The Nifty Bank is now firmly in the red. That's down close to about 120, 130 points. And some of the big losers include Adani Enterprises, top Nifty loser. IT is on the back foot. So you can see a sell-off in Infosys, Wipro, TCS. In the banking names, it's HDFC Bank and State Bank of India, which are dragging the overall Nifty Bank lower to a cut of about 1/3 of a percentage point. And two-wheelers too, Hero MotoCorp and TVS Motors, are struggling with a loss of more than 1%. It brings us to a close with Midcap Radar from the entire team. Thank you for watching. Don't go anywhere. Mutual Fund Corner is up next.
want you to recount the day that you walked into the State Bank of India at 22.
End of the day, my face was filled with black streaks because, you know, while you're changing the carbon, it comes onto your fingers. My hands were aching. My head couldn't add 2 plus 2. First day was like one whirlwind. People don't work in the public sector. Total myth. In the last 4 years of my life at least, I never went to sleep before 1:30 in the night. I came back with 2 middle-sized suitcases and I had to clear all of those files. Yeah, exactly. Banks have the trust of the people. And the day they told me that somebody is coming to, you know, take your picture so that they can paint it, I deliberately put on a red sari. Giving up is very simple. It's a 30-second email you can put in order to resign.